In this video, I'm going to be revealing my futures trading strategy by going over an actual trade. There's sort of this misconception that you need a lot of money to trade futures, but in this video, I'm going to show you a trade where I only risked $80 per contract to make $700, and with 2 contracts, that's $160 risk to make $1,400. And by the end of this video, you'll have an understanding of the strategy that I use to do this time and time again, and how you could potentially make a consistent income trading futures as opposed to trading options all the time where you were subject to Greeks and a lot of volatility and inaccurate pricing. So stick with me and I'll show you how it's done. Let's get right into it. So we sent out this futures trade on the Discord. Now, the reason that I was trading RTY, which is the Russell 2000 futures contract, and not the ES or the NQ, is for a very specific reason that I will talk about in a second. But I want to dispel the rumor that you need a lot of money to trade futures. Futures are a lot more precise than options, especially when day trading. And we've been trading a lot more futures in terms of day trading than we have options. And so many of our members have been making a ton more money because of it. One of our members had their first Apex payout. This is a funded trading account, $2,000 payout. And a couple of our members actually had a record day, all on futures. Now, I don't mind options, but during the day, if the trade goes against you, you could be down 20, 30, 40%. That just does not happen with futures. Futures are a lot more precise. I did a whole free video on how to trade futures. Check that out here. But the reason that I picked the RTY futures is this. If you take a look at ES after market open had already started forming this accumulation pattern here and was actually on the verge of turning green. However, RTY, which is, like I said, the small cap index, was actually bleeding red. It was down significantly, which at first I ignored it because I didn't want to long something that was really weak. Well, as the S&P 500 and the NASDAQ got more green, RTY actually started forming. And what I noticed was a liquidity grab. So if you look at RTY and we zoom back, you can see there is a strong support level. Here's the support level that I'm talking about. This actually lasted for 3 days. Now, if you're familiar with the channel, you know that we wait for liquidity before taking a major trade. And you see that RTY actually formed a liquidity grab below this support level, right? This is the market potentially taking liquidity for the next move up. And because ES and NQ started to turn green, well, now this interested me because I was like, hey, there might be a reversal on RTY that nobody sees coming. And RTY, by the way, the collateral is a lot less, and it's a lot more of a manageable position size than ES and NQ, especially for those of you that are beginners. So we only risked $80 here to make essentially almost $700. So after we took that liquidity, it was clear to me that we wanted to break structure. I'm just going to make this here dotted, but it was clear to me that we broke structure to the bullish side. Now, I did not take this first trade here. I actually waited a bit until to see if we were establishing more bullish market structure. And as you can see here, this is a series of higher highs and higher lows now. This is textbook bullish market structure. So I was comfortable taking along on the next retracement. For those of you that are in the personal mentorship, or for those of you that do the masterminds with us, or even for those of you that are just in the regular monthly trading academy, you know that this is the typical bread and butter setup. Liquidity, wait for a break of structure, and then just trade the retracement with a tight stop limit that can give you a large RR trade. As I said, this trade, we only risked $80 to make $675 per contract. So if you switch down to the 3-minute, you could see here that we have a fair value gap. Yes, this is an ICT term that I adopted into my own day trading strategy. I'm not an ICT trader, so don't come to me for that. But I do like some of the concepts. I back tested them thousands of times and noticed that they are sharp as any tool in your shed. You see that we have the fair value gap here. And if we take our Fibonacci, you can see that we have our famed golden pocket, the thing that we love trading off of, especially when we see that confluence, right? And so we took this trade, and there's one more thing that I want to make sure that you guys are privy to, and that is the RTH gap. So if you come down here in TradingView and click on regular trading hours instead of electronic trading hours, it shows you the gap for the day, because futures trade 23 hours a day, but this will show you the gap from the previous day to the following day, right? And it doesn't include the overnight trading, etc. The reason I like this is because it shows me where there is a potential to go to. And as you can see in the trade alert itself, we were already up on the trade, and I said I'm going to be taking profit at the last wick before the RTH gap. So this right here was my profit goal. Now, you do have a day where it goes from bearish to bullish or vice versa, and there is an RTH gap. Make sure you are looking out for that because there is definitely potential for that to get filled throughout the day. Now, it's not a certainty, but if, again, you have that taking of liquidity and now you have a shift in structure and we are going bullish and we have this gap to the upside, well, then you can expect to at least fill most of it. And sometimes if you're lucky, fill all of it. And we got to the RTH gap. This right here was our profit target. We got out at 1,929.4. If you take a look at our stop limit and our entry, this was our entry was at 1916.4. Our stop limit was at 1914.6. This is an $80 stop limit. That's it. Because each tick on the Russell 2000 is $10 and the tick size is 0.1. So a full point move is 10.1. So a full point move is $50. So this essentially was an $80 stop limit here if we got hit. Not too bad. And our take profit, like I said, was eventually that 7.2R to 1, 7.2 times what we risked, which is essentially $675 per contract. That is when we got out. This was a perfect trade. I wish every single trade was like this. Again, you have the confluence with the liquidity event, with market structure, with the fair value gap, with VWAP, with the golden pocket, the fact that S&P 500 and the NASDAQ were also turning green on the day. And then lastly, we had that RTH gap and our stop limit was able to be set very close to our entry. So this is a perfect trade by all accounts. You are not going to get this many confluences on every trade, but as long as you have a structure where you do not take trades until those conditions are hit and you have at least 3 confluences, then you should be good on your trades, especially if your risk to reward is more than 2 to 1. In this case, this was 7 to 1. If this sounds like Spanish to you, I sympathize with you. I promise we were all there at one point. Consider signing up to the academy. We did open up monthlies for people just like you because people were complaining that, hey, the cost to entry was too high and, you know, we can't afford it, we can't get in. And we just wanted to make sure that it was accessible to everybody. So I believe that it is at a fair price point now. And I guarantee that you will be a better trader after entering than you will before you came in. So we did put a coupon code down below, 50% for the first 3 months. Make sure you click that. It is worth your while. I guarantee you'll be trading with me alongside thousands of other traders. And maybe down the line, you'll be able to join the mastermind or the personal mentorship, which is going on right now, the summer mentorship. Anyway, traders, hope this was helpful. Leave any question that you have in the comment section. I'll try to answer every question there. Leave a thumbs up if you got anything out of this. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.